Do you ever sit at your trading desk and feel the pressure to guess which way a stock is going to move? You can just feel that stress building in your body. It makes you unhappy and tense. Well, in this video, we're going to show you that all of that is not necessary. In short, there are excellent ways to make money long and short and get rid of all that guessing and stress. Learn to sit back, relax, and let the best trading opportunities develop. If you want to grow as a trader and grow your trading account and reduce that unneeded trading stress, then this video is going to help. Hi, I'm Mike Bellafiore, Managing Partner of S&B Capital, and we're a proprietary trading firm located here in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade and The Playbook. Click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. Well, in this video, you're going to learn how to make money long and short as a trader. You're also going to learn the bounce trade. You're going to learn the advantage we have as active traders over big money traders, the importance of a structural edge and knowing what that is for your trading. When active seven-figure traders trade at their best and when they trade at their worst, the answer may surprise many of you. One signal that turns momentum in an oversold stock into a buy. And always the biggest reward we hope that you take away from these videos is to think through a trade like a professional trader. For those of you who want to improve your trading so that you grow your trading account, this video is going to help. If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders just in of itself into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up the free registration page in a new window. Don't worry, you're not going to lose this video. You can also visit tradingworkshop.com to register for this free, intensive, awesome workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So this was a bounce trade that happened in Uber a couple days back.
So I think this is a good example, and I asked you to do a playbook of this trade so we can discuss it. It is a great example of how you can make money short and you can make money long. We put out a video recently when we thought Uber was short. We've talked internally here about when we thought Uber was a short. We caught a good bit of that down move when Uber first came out and showed its weakness. Most people thought of it as a failed IPO because it couldn't hold above 45, couldn't hold above its IPO price. There was a really good opportunity to the downside. We've talked about it in length, okay? So I won't stop talking about it. But then there was actually a really good long opportunity. And it was days later. So we were really negative, really negative, putting trades on that fit our playbook to the short side. And now we found a good opportunity to the long side that we want to talk about. But I want to ask this question. What is the one huge advantage that we have over other sophisticated market participants?
Maneuverability, speed.
Yeah, so Jacob said maneuverability and speed. Yeah, big sophisticated, big money traders, it takes time for them to get into a position. It can take multiple days. They have really large size. For us, we can get in really quickly at really good prices. We are nimble. And so I was on a call with an incredibly successful market investor, former professional trader, still present futures trader, who is involved with some of these biggest traders in the world and their needs and working with them and funding some of them and facilitating some of them. And he said something really interesting, and it kind of hit me when we were talking about this particular trade, and it's something we need to understand. And the question is, what is your structural advantage with your trading edge? people who are very sophisticated in marketplace, this question is very important to them before they fund somebody. They're not interested in putting big money into somebody unless there's a structural advantage with their trading edge. It's not just that they have trading edge, it's that they have a structural advantage to their trading edge. So it's not just that we're going to talk about a particular edge trade on the long side in Uber, and it's not just that we've talked about edge trades in Uber in the past on the short side. Your answer to that first question is your structural edge, and you cannot minimize that. The fact that you can get in and out very quickly and that you can see big selling and big buying is your structural advantage. It is not to be diminished. So when you can add on an extra 5,000 shares, which is a nice add for you, understand that you can do that when somebody else needs to add 50 million to make it worthwhile to them. They need to get out of 100 million to hit the bids when we can get out within $500 and 10 cents of a particular play. So understand that. And when you're thinking about your playbook, make sure that's a part of it. Big picture, Scott.
I'm sure everyone's been following up on this, but we've been in a really hot IPO market the past several months and a strong uptrend in market. So Uber had its IPO on May 10th in an underwhelming debut. It was priced at $45 per share, but it didn't open above $45, which just seems pretty crazy for supposedly the biggest IPO of the year. So Lyft had its IPO last month. Concerns of overvaluation and major headwinds in the coming years to turn a profit of even $1. Lyft has been cut in half from its opening print of 88 to a low of 47s. So really pessimistic there for a long time, sustained selling. Global markets were shaken up the past week and over week and a half over trade negotiations with China deteriorating. So we saw a little more volatility in the market and some sell-offs in the overall market.
Really good job teeing up the big picture there.
So we'll kind of see that on the charts here. You can see that most recent pull-in on the daily chart of the SPY amidst the trade news. Here's the SPY 5-minute. We've had a lot of really big gap ups and gap downs, and it's been really inconsistent. Here's Lyft since its IPO. So just straight selling for a really long time and getting really extended to the downside.
Yeah, big failure in Lyft, right?
Yeah, huge. So it was down at this particular day about 50% from its IPO.
So we think about in sympathy plays, and so Lyft did poorly. I wonder if Uber is going to do poorly as well. Different stocks, not all the facts are the same, but same sector. First one did poorly. Let's see how the second one did.
Right, and you just want to be watching both if you're going to trade one of them. So it's good to see that. So here's basically the past couple days of Uber prior to this day. You can see that we gapped up.
Well, let's go back to that, and let's just underscore that point. So when we're trading Uber, we can also use Lyft as an indicator as to whether or not we think Uber is going to go up or down. So if we notice Lyft's really, really weak on a particular day, we might think, well, maybe there's going to be selling that comes into Uber. If we see Lyft's really, really strong on a particular day, we think maybe there's going to be some buying in Uber. It doesn't mean that that's going to happen, but it's something that we're following to give us more information to make a better trade decision.
This was Uber since the IPO. Basically, we opened up and at about 42, tried to push up to 45 and failed, and was in a constant state of selling for the next day. And then coming into this day, we were gapping up. Lyft was gapping up as well. So there was some positivity there and a definite change in characteristics where you could see a little more buying coming in the morning. Here's just the fundamentals. We know it was valued at about $80 billion, $45 per share, and opened up at $42 a share this day.
And that's below what they thought 6 months ago?
Yes, they had
Uber was going to
back and trying to
valuation was much hyper. Yeah. Was thought to be much higher 6 months ago, 3 months ago. and they had to come in much lower than people had been expecting in short order a while ago.
Right.
And can't even hold above that decreased market price.
So here's the Uber 3-minute, just kind of showing the context of the day. So you see we kind of got a pretty big gap up in the morning, and we sold off a bit in the morning, but then the dip started being bought, making higher lows. So that's a definite change in characteristics from the prior 2 days since the IPO. Here there was some strength in lift as well. We see the gap up and pretty strong trend in the morning. So that gives you a little more confidence in that Uber may bounce today.
And Lyft holding above VWAP pretty consistently.
Right. And then we see, this is just SPY on this day, so we gapped up, the whole market gapped up, and we had a pretty strong uptrend for most of the day as well. So kind of a couple checks in your favor there for the long thesis on Uber. Just some technical analysis on Uber. We can see this technical level at 3780 was a big level pre-market as well as during the open hours of the day. Basically, it was failing to get above there after it dropped below there. You know, what is that? 1, 2, 3, about 4 times, and then kind of finally broke through, and then mostly held above. Besides that, this small dip over here towards the end of the day, but that's a pretty clean intraday technical level in my opinion. Something you want to pay attention to and base trades off of around a good inflection point.
Well, let's go back to that point. So Uber's trading down, 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 down. People are looking for a bounce. Trading down, down, down. People are looking for a bounce. One of the ways that you trade a bounce is you let a very clear resistance level formulate in a particular stock. You let a really important technical level, a technical resistance level, show itself. Show itself to you, show itself to your buddies, show itself to your chat room buddies, all right, show itself to other people on the desk, other people at other desks, hedge fund traders, prop traders, institutional traders. Everybody sees it. It should be clear. On a scale of 1 to 10, it should be an 8 or above in terms of a technical resistance level in of itself. You should say to yourself, if it gets above this price, the momentum is now back to the upside. It's gone down, it's gone down, it's gone down, it's gone down, it's gone down. What's going to make it go back up? Well, one of the things that makes it go back up, not the only thing, but one of the things that makes it go back up that gives you a signal to play a bounce is it gets above an important, a significant, everybody sees it, technical level. And so that's the question you want to ask yourself when you're looking at that level. If it gets above that price, is the momentum shifting back to the upside after multiple days going down? Do a lot of people agree that this is a momentum shift? Do I want to get long if it gets above there?
Just to add as well, this is the first kind of major higher low that we've seen in the past 2 days, and then once we get above this technical level, we're holding above VWAP, which is a definite change in characteristics. So definitely adding to the long thesis there. And a way you could trade it, so once we're kind of bouncing on this level, trying to get above, break down a little bit, but gets held up, and that's where we form the higher low, and we finally come back up to this level and break through. So right there, I'd want to put on a tier and just see if we can hold up above here, just to have some risk on and a little bit of size. And I would probably give this a little bit more room because it's very kind of wiggly, and it can really wick you out if you don't give it enough risk. So I'd probably risk down to this 50 cents area, or even possibly below this consolidation area. But once we see that it holds a second time and we kind of bounce right back up above the 3780, I'd put on a second tier and just kind of see if we can break higher and hold higher the rest of the day. Because at the same time, remember, SPY is going up, Lyft is holding up higher. So there's a lot of checks in your favor to kind of just put on the size and for a longer swing, in my opinion. So we come back down, hold again, and we get some pretty strong selling here. So I may think about taking some size off just to lock some in on like a lower high, because the thesis may be changing here, and it's always good to just maybe cover your risk a little bit and lock a little bit in. And then here's the real test. We come back, break through the level, and then immediately rebid in the next 2 minutes. So that's like a real sign that people want the stock. There's a definite change in characteristics here. So this is really important to watch, in my opinion, right here.
Breaks through VWAP, reclaims VWAP instantly.
Yeah.
Sign that the big money longs are fearful that they're going to miss being able to buy it, so they reclaim buying VWAP right away. Good, good.
Something personally that I like to pay attention to in my own trading is this confluence between like a technical level and VWAP. I just think it adds, probability a little bit more in your favor if you have this kind of confluence of two kind of important indicators. So that's something I like to see as well. And
So you get technical level, important to you. VWAP, important indicator. Dips below there, immediately reclaimed. Good. Yeah, good signal there.
And then we just see the volume start to pick up and pick up. So I would, once this is like a clear breakout trade at this point, if we get above this previous high. So I would add up to tier 3 here and really size in. And you can see this volume just gradually building and building and building. I would probably take off a tier and do the whole number at 39, just to take some size off and lock some in and hold the rest of the 2 tiers until a reason to sell. And as we were coming to the end of the day as well, there was a pretty big buy imbalance. So people were just buying the stock, really rushing to get in the trade, so no one's really missing out and possibly getting the best prices we'll see for a while in the stock if this is going to be the bounce day. So I would lock some up, lock some in up higher, and then just kind of wait till the end of the day till the imbalance is over on the last lot there.
We make a good point, which is the buyers get more aggressive as it's higher, which seems counterintuitive. But there's a certain amount of people who see that get above the technical level who want to buy. And then as it's holding and pushing higher, more people see that this is ready to bounce. And as it's pushing higher, more people see that this is ready to bounce. And as it's pushing higher, more people see that this is ready to bounce. And as it's pushing higher, more people, it's a crescendo. And it just keeps getting louder and it keeps getting clearer, and more people start seeing that this is ready to bounce. And so that volume can increase even multiple points into the move. And so this is something that you can trade intraday like you did, but the stock, since it got above this turning point, this momentum changing point, this inflection point, went straight up to 44. So you could have swung it as well. You can build playbooks for swing trades as well off of these key technical areas, these key inflection points, these key momentum shifts in a stock that's sold off a little bit too much based on your thesis. Trading lessons from 7-figure traders. They trade best when they're open-minded. This is an example of a stock we traded short and we traded long. We didn't just say, oh, Uber's overvalued, they're never going to really make it, Lyft's worse. The Morgan Stanley screwed up the deal, everyone's going to panic out of it. Uber's going to get this, all the negative nonsense that you hear about Uber. No one's going to buy Uber Eats. Postmates is better. Amazon's going to come into this industry anyway, like they do everything else. You want to trade open-minded. They develop a thesis, but they trade what they say, and they trade worst when they trade their idea. They trade worse when they trade their idea. I think Uber is going to go up. Okay, and let me just get long. SME challenge, prepare one good trade short and long before the offer. So we talked about this the other day, Jacob, with you. You were preparing for a short, and we said, fine, nothing wrong with your thesis. Get in the habit of preparing one good trade short, and one good trade long before the open, so you're open-minded. And then while you're in a trade or watching a particular stock, have that open-minded self-talk. What's a great long? What's a great short? Even if you're in the position, where am I wrong? What would be a great flip? what would be a great ad, see both sides to a particular trade. Hey, so go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next, and perhaps what you found helpful from this video. From all of us at SMB, train and trade well.